What it do, what it be? It's your boy Stockman. Welcome back to another episode of the Anonymous Investors Podcast. I am your co-host, the Stunk Man himself, King Stunk, visited always by my co-host, all-powerful, all-knowing, omnipotent God. What up, God? What are you doing?
What up, Stonk Man? Are you the creator of Stonks.com?
No, I like the Stonks. We like the Stonk. The
Oh,
game's
have you ever even heard
like
of
the Stonks. Power
Stonks.com?
to the Stonks, baby. Power to the Stonks.
Have you heard of Stonks.com? You know what that is?
I have no idea what the fuck that is.
Oh, it's just like this company that was founded by, I think it was Ali Moyes who founded this like deodorant company, and then he sold it for $100 million. And he basically founded this company called Stonks.com, and it basically gives like retail investors access to these private venture capital deals that typically only people in Silicon Valley would have access to. So these founders, they come on, they do like their little pitch or whatever like that, and like you can join the presentation and then invest seed money in the deal. So it's kind of like you're a big shot venture capital investor without having the network connections, and the money to do that.
So do you need to be an accredited investor to do that? Is it kind of like what's that one website? You know what I'm talking about? It would
Start Engine.
Equity Zen or like Start Engine, yeah.
Uh, yeah, I don't think you need to be accredited. I think there's like certain deals where you need to be accredited, and then other deals where you don't need to be accredited, and it just depends on the deal and how the founder wants to raise money.
That makes sense. That totally makes sense. Yeah, the Start Engine and Equity Zen, like those things are interesting because they find shares for you. So like people who don't know, like you have to be an accredited investor to do that, which means like you're more sophisticated. So the big thing with like Equity Zen is that I think you need to make 250. I think it's like 200 or $250,000 a year, and then plus like $1 million in net worth, and then you also need, or actually, I think if you have a professional designation, you can get away with it too. So like I think if you're a PhD or you have like a CFA or a CFP or like a CPA, you could invest even if you make less than 200,000 and have less than like $1 million net worth. But once you're an accredited investor, you could literally invest in companies before they go public, which is fucking big because that's where you make most of the money, right? Like most of these companies, once they go public, it's just kind of a cash grab for like the large majority of them. And they're just looking to cash in off like, just like an increased valuation from going public. And then obviously there's like a lockup period for shares. Usually it's 6 months, right? It's every 6 months. Like I think it's every 180 days or some shit like that. They're able to start liquidating. But it's just some wild ass shit. You can make a lot of money with that. But typically I think for Equity Zen or any of them, they want you to have like 20 to like 25,000 in like minimum capital to deploy into these private companies, right?
Yeah, I believe so. I believe it's like 25,000 that you have to have minimum to to put into these companies. But the like basically they when they raise these valuations, they raise this money at these exorbitant valuations. Their goal is just to like dump it on the retail investor, and they become the ultimate dumpster dive. They just dump it on their ass. But the other thing you were saying too about these executives and how they have these positions and then they have to wait 6 months to sell off. These executives, they actually like hedge their positions even when they go public. They Because you're not required to put your net. You're not required to put like your net position down. You only have to put down what you own. So they kind of like hedge their risk out of these positions.
So do they do that using like options or like other derivatives? Like how do they do that? How do they hedge? I never heard of that before.
They basically like they go to an investment bank, and then they set up these like VIEs, or these variable interest entities, and they give these shares to the investment bank, and they basically loan it to them, and then the investment bank will hedge the position for them so that they don't lose any money on the investment. And since like they're not the ones doing the trade and they're not the ones like hedging the position, there's no like insider trading or anything like that, since they're executive in the company. So by lending the shares out and letting an investment bank do it, they kind of like skirt the rules of the SEC.
Yeah, that just sounds like a blatant violation of the Securities Act of 33, right? What the fuck? That's so weird, dude. That's so fucking weird. 34, by the way, for people who don't know, I'm referring to the
Yeah,
Securities Exchange Act of 1933. That's the federal regulations that was set forth for any sort of security issued that is not a municipality issued security or federally issued security. Speaking about Wall Street doing what they want to do and trying to get away with it, I don't know if you saw this, but big update, people, big update. Remember we spoke about Melvin Capital, our good friends over there? It looks like Melvin Capital's finally shutting down, boys. Round of applause, everyone. Round of applause. Woo! We did it. We bankrupted Melvin Capital. We did it. We saved Bikini Bottom. Melvin Capital closes up shop. They're done. Finito. As we previously reported, they were down, I believe, 53% since the GameStop debacle. And that's overall performance. That's not on the one position. Imagine what it is on that one position being naked short selling the stock. Oh, my God. They must have been down so bad. But for them to close up shop, this is big news. I think it's a big win for retail investors. And I got to be honest with you. What happens with these hedge funds, it's very shady. Like, this guy's going to go out and he's going to make another hedge fund, and he's going to do it under the name of, like, Shitfuck McGee hedge fund, right? Or, like, Dick Bukaki hedge fund, right? And he's going to do the same bullshit again where he's naked short selling common stock and he's looking to bankrupt some companies and he's, like, basically scraping the bottom of the barrel, looking to make a couple extra bucks. But you know what's going to be different? The different thing is that Wall Street bets and the 10 million plus degenerates on that fucking subreddit, as they call themselves, they're going to find out this guy's other hedge fund and they're going to fucking put the fear of God in him. This guy's going to be afraid to cross the fucking street because they're going to find out whatever his other fucking hedge fund is. And you know what's going to happen? They're going to do the same fucking bullshit again. And I think he should be shitting his pants. I think he should get out of the securities industry. Take the money you made. You were a portfolio manager for Steve Cohen at SAC Capital back in the day. Probably a millionaire. Go fucking buy an index fund and go fucking ride off into the sunset because it's over. I think he's done. I can't see this bozo coming back. What do you think's going to happen, though? Do you think he'll open another fund? Do you think the Reddit guys will crack down again? Like, what do you think's going to happen here?
Oh, of course he's going to open a new fund. The only reason he's shutting down this fund is because he's so far in the red that he can't get his carry. He'll never be able to achieve his carry again because you have to pay off the investors before you receive any carry when you run a fund like that. So he's going to shut down and then open a new shop and start milking his investors again.
Yeah, that's a good point about the carry. I was just thinking about it from, like, a tax perspective. He would have some fucking crazy net operating loss carry forward. But like you said, he's not going to get any of his carry because he basically shares in the profits and losses of his investors. So he still has to pay the investors back. So he's just fucked. Like, he has to just close up shop, right? I mean, at this stage of the game. So that's pretty much why he did it.
Yeah, of course he's closing up shop because he's basically done. We're going into a recession too, and this guy's opening a hedge fund during a recession, so it might fit his strategy of like shorting companies and destroying them, and putting them into ruins. This is the perfect time to actually short.
Yeah, but I don't think it's wise to ever naked short sell stock. That's a big problem. Big fucking problem. But yeah, recession's on the horizon. I mean, we see what's going on. Yep, go ahead.
Yeah, naked short selling is it's never a good thing to do. You always want to hedge your positions through options and such to make sure you're not totally naked short and that you can be bankrupted through periods of extreme volatility, which we saw that with GameStop and AMC, where a lot of people went bankrupt. Even though the valuations made no sense, there was periods of extreme illiquidity in the marketplace, causing massive run-ups in stock prices, which bankrupted a lot of people. A lot of people on Wall Street got bankrupted through that. But yeah, I think we're going to see a recession on the horizon. We got inflation still at 8.1%, and it's not coming down. The inflation is like exorbitant. We got the Fed.
Those are the fake numbers. Inflation. Those are the fake inflation.
Of course. Yeah,
it's really real inflation's like 13% right now, bare minimum. bare minimum.
Probably even higher than that. But we're not going to get too much into that. But inflation is ridiculous right now. The Fed, they're sitting on their ass. They're not moving quick enough to basically tame the inflation. And I don't think people really fully understand like how much interest rates need to come up to basically tame this inflation. The Federal Reserve, even on their website, on their mandate, they say if there's 8% inflation, you need to put interest rates to 8.5%. And so we got a lot of room here to go with inflation, to go with interest rates to basically tame this inflation. And when we go that high with interest rates, the credit markets are going to dry up, and all these companies like Peloton, all these Silicon Valley bubble companies, these bozos, they're going to go out of business because they have no earnings, and their growth is stalling, and they need to raise money and fundraise, and there's going to be no access to capital through the credit markets, so they're going to be unable to raise the money. They're going to go out. We're going to see stagflation since we're going to have the interest rates rise, and we're going to have like slow growth. And you know what kills me too is we got the Fed. They keep going, oh, we're going to come in for a soft landing. This is your pilot. We're coming in for a soft landing. They're going to die on that phrase. We're not coming in for a soft landing. The plane is coming down. It's going to crash into the fucking ocean, and we're all going to die. And they keep going, we're coming in for a soft landing. Consumer demand is waning, right? Consumers are spending less. We saw this with like Target earnings and Walmart earnings. The demand is like severely lower, and all these
How
companies they
about the
built up.
shortages? Both of those stores, they sell produce and they sell groceries. No one can fucking get anything.
So
There's a
what shortage?
huge problem with the baby formula now. No one can get their hands on it. They just signed
That's
an
true.
executive production order on that.
Yeah, I don't know what director. I guess they were like blaming somebody. The federal was it the FDA director? He's supposed to like keep that in
Yep.
line.
Mm-hmm.
Yeah, he got blamed by the White House and politicians. He wasn't doing his job. But yeah, these like, and then all these companies, right? They have massive inventory because there was previously supply chain constraints, so they over ordered, and now consumer demand is lower, so now they're gonna have to basically cut prices on all their inventory to offload it, and they're gonna have to sell stuff at losses. They're gonna have like a massive reduction in the amount of money that they earn because they're gonna have to keep cutting costs on their inventory. Another fucking recession indicator is like oil's fucking ridiculous, right? Borrowing costs are high. People are defaulting on their credit cards. They're putting more and more money on their credit cards because they inflation on food and energy is just exorbitant. The yield curve is
Absolutely.
flattening. Real wages are fucking dwindling down, right? We only see 5% growth in wages, and there's an 8% inflation factor, so there's like 3% negative growth in wages.
More
And
Americans are working part-time jobs than ever before as well. That's another important metric too.
yes, that's important. Yes, people working, I think, like 2 or 3 jobs now, which is ridiculous. In order to meet that, to get their ends to meet. And you have you ever heard of like bellwether companies? You know what that is?
Bellwether companies. The term sounds very familiar. I know it's an economic term. Isn't that just like, I could be wrong, but isn't that just like kind of cyclical type of companies? Like,
Yeah, basically. So like a bellwether company would be like, say, like UPS, right? Or a cardboard manufacturer. So basically, by looking at the bellwether company, you can determine the state of the general economy. So, like, say UPS has less shipments going out, you could basically say that there's less demand for online goods since there's less shipments going out. Or say
right.
there's less cardboard boxes being made, you could say, oh, that means there's less demand for goods and such. So, like,
So
if you look at these bellwether companies, they just put out earnings like UPS and all these other companies, their earnings are significantly down, like Home Depot, Target, Walmart.
right.
Uh,
I was
yes.
gonna say bellwether companies in terms of being cyclical. Would that be a company like Caterpillar that specializes in the sale and rental of construction equipment and construction
Yeah,
machinery?
that Caterpillar
Because
would be a bellwether
construction is very
company.
cyclical. It kind of goes
Caterpillar,
in waves, you know.
right? Yeah, Caterpillar would be a bellwether company. Caterpillar has actually been holding up pretty well since of like the food shortages that they're ordering more equipment to basically get access to the food since we see such high inflation in food. That's one of the few companies actually holding up in this time pretty well.
Yeah, so now here's the main thing that I want to ask you because you're bringing up a lot of this macroeconomic talk, right? You mentioned oil and how crazy gas has gotten. Now I'm looking at, I can't believe it. I just saw it at the pump the other day. Now, I mean, by the time you guys listen to this, it's probably going to be a lot more than this. But I saw at one station, you'll never believe it. Not even self-service, it was full service. It was 4.87 a gallon. Fucking unbelievable. And I'm at half a tank right now, so I got to pay this fucking bullshit, tomorrow when I go out. This is fucking ridiculous.
Only 487 by you? My gas over here is 519.
Is it really?
Yeah.
Well, is that premium or regular or diesel?
It's Exxon. I don't know. There's a Lukoil, right? There's an Exxon, and basically there's a huge discrepancy. They're like right next to each other. It would be like 519 for the Exxon, and it's like 469 for the Lukoil.
Well, you know what they usually do, right? There was that whole thing with, I mean, Michael Francis says this, like,
they dilute
this in the past. Yeah, they fucking, yeah, exactly. They collude, like, so like the neighborhood guy who owns the station will talk to the other guy who owns the other station. All right, this week we're at 466. If you go over 466, you're in big trouble. But you go at 466, and then they collude to set the fucking pricing for the neighborhood. And then no one really bats an eye because then they go, oh, the pricing is around the same. That means that it's like, reasonably priced, or like, oh, it's less than one standard deviation of a difference. Like there's not really anything going on. But meanwhile, they're making under the table deals to collude for the pricing.
Yeah, but this is weird. It's like they're like right next to each other, and it'd be like 519 versus 466. I don't know who would go to the 519 place, even though it's Lukoil and it's Russian, whatever. But I gotta save money. I go to the 466 place.
Yeah, speaking of Russia, so what's going on with them, right? We saw all these businesses pulling out. Did we hear, is there anything new going on with this where, like, any businesses kind of coming out and shutting down operations entirely, like maybe that didn't before, or any new embargoes? Like, what's going on with Russia?
Oh, I heard
businesses.
I actually heard McDonald's has just they previously paused their operations in Russia, and then now they basically permanently out of Russia now. Like their CEO said a statement like, for now we close the doors, but we would be willing to go back into Russia in the future, so they're not permanently closed off. But basically for now they sold off their operations to this guy called Alexander Gover, who's basically a Siberian. He's a Siberian guy. He used to be like a coal miner, and he invested in like construction, and he operates a bunch of different restaurants. He operates across many different industries, which don't really connect to one another, which is odd to say the least. But and he seems to be successful in every industry he operates in, and these industries are not connected to one another and require different skill sets. But yeah, he basically bought 850 franchisees. These are basically 850 stores that McDonald's owns. So usually McDonald's they run like a franchisee model, and they only own, I think, like 5% of the actual McDonald's are owned by McDonald's. But in Russia they own like 85% of the stores they own themselves. So they sold these 850 stores to this guy Alexander Gover, and they're going to take down the McDonald's logo, and he's going to basically operate the restaurant under a different name, a different kind of burger joint. It's going to be like Chicago style burgers, like I said.
Crazy. A lot of stuff happening with Russia, man. I mean, they're one of the world's largest economies, obviously one of the largest OPEC countries as well. They had some major problems with Iran and Saudi Arabia, right? For the longest time, they were kind of beefing in OPEC, which led to that whole oil going negative thing, which is so unbelievable to think about now because we're only 2 years removed from that. And it's like, and like oil's over like $100 a barrel right now, right? Like it's fucking crazy. Anyway, whatever. But just talking about the macro economy and like a lot of other things going on with that, there's also this risk of bankruptcy for a lot of companies, right? And now we see crypto, there's been this giant pullback there, right? We've seen some other stuff bubble up and implode. But I mean, really, like the threat of bankruptcy and like what do you think? Like, what kind of effect does this have on the crypto industry with the economy taking a turn the way it is? And really, the tech is finally starting to come around for crypto. There's finally starting to be some like actual real world application for a lot of coins and a lot of projects, but now it's going to be tough for them to raise funds, right? In this sort of tightening of the economy and, sort of contraction, right?
Yeah, a lot of companies are going to have to they're going to have to cut significantly. They're going to have to reduce their burn multiples. They're burning way too much cash too quickly, and the credit market's going to dry up. So they're going to have to be able to have to survive for, I would say, maybe 3 4 years without raising money. That's what they should plan for in case they're unable to raise financing. Even good companies are probably not even going to be able to raise money. So that, they got to cut down on their burn multiples, reduce it significantly, cut wages. Uh, these tech companies, they should be cutting their workforce. You saw like Robinhood cutting their workforce. They cut their workforce 10%. That's a good move. You saw Netflix cutting their workforce. You saw Coinbase halting hiring for the time being. These are like smart moves. They're run by prestigious individuals who know what they're doing. And yeah, you got to cut hiring. You got to lower your cost, and get rid of your burn. So that basically you want to survive. You want to just basically survive. And since downturns, a lot of companies are going to go bankrupt. You shouldn't worry about growing in a downturn since all these companies are going to go bankrupt, and you're naturally going to gain market share through these bankruptcy proceedings and such, and their customers are going to come over to you. So you should be worrying about surviving, not about growing. This is a time of survival, not growth.
Yeah, I totally agree. I think too many companies go into this mindset of like, especially when things are good and times are like incredibly easy. Oh, let's just borrow as much money as we can. We don't care about interest rates like on borrowing money. Like who gives a shit? Our growth is fucking, 20% year over year annualized growth and the interest rate is only like 2 or 3%. And then once shit starts to get tough, then these companies they fucking panic and they have all their money tied up in PP&E, right? Or they have all their money tied up and, you know, hiring people and having these bullshit positions within companies. Like, look at a company like Spotify, right? Like, Spotify's been around so long. Based off their revenue share for artists, like they should theoretically make a shitload of money, and like they're not even really that profitable. Are they even profitable? I'm not even sure. I have no idea, right? I think they aren't. I want to say.
Well, I don't know if you know this about Spotify, but there's an interesting story about Spotify and the shadiness that actually Spotify did. So back in the day, like Spotify was paying, they had to pay out like an exorbitant amount to these record labels. So they basically the way Spotify works is the percent. Say you play a song this percent of the time on the platform, that percentage of the revenue goes to the song. So what Spotify would do is they would take these like illegal streaming things and they would create their own like background songs and party musics and put it into a playlist and put them on the homepage and such, and they would basically farm their own music to lower the overall revenue cut that they would have to pay out these record companies and labels and such. So if they didn't basically put their own music on the homepage and they didn't farm these music songs that they created, they wouldn't be profitable.
Yeah, what did J. Cole say on that one song? I know artists faking their streams, getting their plays from machines or something like that. He's talking about stream farms, right? Is that what that is?
Yeah, stream farms, but these were stream farms actually run by Spotify, like Spotify itself, not
Whoa,
music
that's
labels.
fucking crazy.
So, like Spotify would create a song, like it would just be like a do do do, like a party song, whatever, like no lyrics, just like a background kind of thing, and they would stream that to lower the revenue that they had to pay other people. You get what I'm saying?
Yes, yes. Okay, so for people who don't know, yeah, because I knew about this whole revenue model that they have of the pie. Like it's like basically a pie chart, right? So people who don't know about this, it's not like it's not this doesn't deviate, right? So the way it works is like all artists share in like a pool of revenue that's generated by Spotify. So like if Drake accounts for like 20%, like he's getting 20% of that pie. But what's inherently wrong with it is that you're pitting artists against each other. So in your example, in that revenue share model, Spotify could just make like five fake artists and then that could account for like 30% of revenue. So really, Spotify is just paying themselves the 30% in revenue, but they're doing it through like fake artists, right? Is it like a way of them to kind of get away with paying out less to like mainstream artists and anyone that would get a slice of that pie, right?
Right. Yeah, and they even had this list that came out.
was like it was like a list on Spotify. This was like maybe like when Spotify first came out, and the top 10 listeners on Spotify, they were like people that they were names that people never even heard of. So they were obviously like fake people that Spotify made to like cut down on the revenue they had to pay out.
Yeah, I don't even understand. I mean, from Spotify's perspective, it's obviously profitable, but I don't even understand from like the logistics side of it, like how a stream farm could really even be profitable. Because when you think about how much money you make per like 1,000 streams or whatever on Spotify, like you literally make like nothing. You make fucking peanuts, right? So these stream farms have to be in countries where like the cost of living is so fucking cheap and you're basically able to get electricity for like next to nothing. Like, because it's pretty intensive to like actually have a device, plug it in, and then just have it constantly on a loop, like streaming something. I can't imagine that, you know, you'd be able to do that too cheap. And if you were able to do it at like such a large scale, like why wouldn't more people in like the Western world do it? Like I've heard stream farms in like Southwest, really, I guess more, yeah, like Southwest Asian countries. I've heard of that, and then also like Russia too. Like there's a lot of Russian troll farms and like stream farms and shit like that where people have access to like 10 or 12 devices at a time. But like, what's like the economics of that? Like, how is that even profitable for people living in like, really poor countries? Like, I don't understand that.
Well, you don't even like need a stream farm to be totally honest. Like you basically playlisting is big too. If you look at playlisting and you put these fake artists in certain playlists and such like that, they're on people's homepage. So obviously, like normal people are going to click it, even though they normally wouldn't like search this artist and click on the song. If they see it in a certain playlist or they see it on their homepage, they're more likely to click it. So like you could just they could be profitable in that way, just in like the placement of the artist and where they're located, even if you don't like have to run a stream farm.
Yeah, did you see what happened recently with Young Thug and Gunna? I know it's completely unrelated to finance, but it's like interesting stuff. It's like they both got indicted, and they said that the authorities, federal authorities, and I think the authorities in Georgia as well, they were saying that like YSL, which is like young, was it like young, um, not
Slime
Y,
gang.
yes, young slime, yeah, because YSL is it's like Young Slime Life or whatever, and that's the name of Young Thug's like record label. But they're saying that it stands for something else, and it means like his like gang or whatever. And he's like affiliated with the Bloods. Like that was kind of crazy to see that shit happen.
Yeah, I saw he got arrested on like a RICO charge or something like that. Was it like a murder charge or something?
Yeah. So remember when Lil Wayne's tour bus got shot at, and Birdman kind of gave the issue for people affiliated with Young Thug and people affiliated with Birdman to like shoot Lil Wayne's bus because like at that point, remember Lil Wayne was suing Birdman for his money because Birdman stole like 100 million from him or whatever, and then didn't let him release the Carter Five.
Yes.
Yeah, so that whole thing, apparently Young Thug was there and was like one of the guys that like shot up the fucking bus. So that was like used as like a frame of evidence against him. And then furthermore, they said that Young Thug had some type of affiliation with the Bloods, and Gunna was also involved with it too. Which, when you really think about it, it's like pretty dumb because both of these guys finally have like, well, Gunna's kind of like, he was kind of coming up, like he kind of got big in the last like 3 years, something like that. But Young Thug's been around for a while, and like he really finally started to pop off. Like if you look at his Spotify streams before this whole thing, now his streams obviously went up from PR and the aspect of he might get like he's facing like 20 years unless he cooperates, pretty much type of shit, or like at least 15 years. So Gunna kind of came up. He's more of like a newer guy, so that it sucks that he got charged. And like Young Thug though, like he kind of, even before these charges came in, like he was kind of trending towards being in like that upper echelon of rap, not in like that Drake, Jay-Z, like Kanye stratosphere, but more into like that second tier kind of, where people look at guys like J. Cole and Kendrick and some of these other guys that drop every once in a while. Because he went more mainstream, I would say. I think that's a good way to put it. Like after that one album where it's like a red background with him and he's wearing the bandana, like that's when he kind of became a little bit more mainstream. Not the Harambe one, but the The one after that, I forgot what it's called, but it has like that song Check on there and like a couple other bangers. But like that is when he kind of became more mainstream. So like the timing is crazy though. Here's a question that I have that maybe, we can tie this in. Maybe this is relating to finance here. Do you think that the feds purposely held out on charging Young Thug and Gunna until after they both released their albums that just came out? That's a question I got for you. Because like Young Thug just fucking dropped his album like 3 months ago, and he was gonna go on tour, and I know he was doing.
Well, I mean, if they were like researching him or whatever, and an album could be even though it's entertainment, it's like technically entertainment. You could use the album as some sort of evidence. Like if he says like murder this or whatever in the song,
yes, that's what they're doing. They're actually using lyrics against him, and there were 30 other people indicted. But my thing is this: do you think that law enforcement kind of like waits to charge someone in an instance if they know the person's going to generate tax revenue for the state and for the federal government? Do you think they wait until the person makes money and gets like a ton of money coming in and then fucking charges them after they can get the tax revenue? Or do you think that like they would just charge someone, and then if it just so happened like the guy's about to release an album or whatever the case may be, they're not going to hold back in the process of charging him?
I mean, I don't even know if they have enough evidence to really prosecute this case. Like the people on YSL Slime, right? Are you going to charge everyone? Are you going to charge Travis Scott? Are you going to charge Lil Uzi and like Lil Baby and such? Like there's other artists on the record label.
So Travis Scott isn't on that. Travis Scott's on the Cactus Jack, and he's signed through Kanye.
But he used to be on YSL, right? I'm pretty sure.
No, he was with Grand Hustle. That was T.I. So T.I. actually, a lot of people don't know this. T.I. found like Travis Scott and like signed him originally to Grand Hustle, which is T.I.'s label, and then Travis Scott worked as a ghost producer on. Travis Scott worked as a ghost producer on Yeezus, and then after Yeezus, then Kanye put him on, and then basically signed him to Good Music, and now I think Travis Scott is signed to like his own label technically, which is Cactus Jack, through Good Music, which is then through, I guess, Warner. I don't know who Kanye signed to as like the major like label, like the actual label, but no, yeah, he's not on there. And then Uzi is Don Cannon, who's Generation Now, which is the label that Jack Harlow signed to. If you saw him, he just recently dropped an album too, but his album wasn't that good. He had that one Drake song that was pretty good, but that was about it. He's not that great. But Generation Now is Uzi. So no, Uzi and Travis Scott aren't connected to the Young Thug thing, which is surprising because Young Thug has like 12 songs with Travis Scott. So it's like, what the fuck, you know?
So is this case about the Lil Wayne shooting, or like I heard something about like YFN Lucci too? Is it about YFN Lucci? Whatever the fuck the guy's name is.
So yeah, I know who you're talking about. It's like that one guy that's like 30 that says he's like 20 something years old or whatever. But no, it's like it's not just the Lil Wayne thing, but that's being used as like a point of evidence against him. So like all the charges, I can't even like of the counts that they have. I read somewhere it's like over 150 counts against him right now, and now it was just they denied his bail. I think they denied Gunna's bail as well, and then they said that he's got 150 charges, and now he could be facing up to 100 years in prison. So like they're basically looking to just like put him away like mad long, like basically forever. I mean, however you look at it, it's fucking nuts.
I find it hard to believe though that all these like these rappers and everything like that, they're always being charged for like gang activity. These people might be plants.
Very possible,
put in
yeah.
to like basically get rid of gang activity.
I heard it's very possible. It really is very possible. I've heard for the longest time though, and this is this is speculation, so take it with a grain of salt. But I've heard for the longest time that a lot of these like rappers and like rap groups and labels and associated acts, they're all just fronts for like laundering like dirty money. I heard that for the longest time. And that's a lot of the stuff that goes on because when you think about like if someone, I don't know, just to choose someone arbitrarily, right? Like if Cardi B goes out on stage and makes 250K for like a 2 hour performance, like who's to say that, people she's affiliated with can't sell drugs, make 200K, and then say that she made 400K for the night, or like say she performed at like a private show and made 400K or however much money, right? So I don't know. It's like I heard it's just like allegedly. I heard it's just an easy way to launder like drug money and illicit money, and to kind of like cheat the government in terms of like the source of the money and like showing where you actually obtained it.
Yeah, it's kind of like artwork, like art musical performances, right? There's such a big variable on how much people get paid. Some people get paid $500, some people get paid 100,000, some people get paid $1 million for a performance. There's such a big variable on what people get paid, and you can't really pinpoint what people are getting paid for certain performances. Like even if you go to like a birthday party versus a stage performance versus someone you might get paid less. The connection or whatever versus someone random. So like there's a different price on everything. So it's kind of hard for the government to pinpoint down and track down like the prices for these different shows, which makes it easy to launder money when you can't track prices down, and there's a big variability in prices.
Yeah, especially for like booking agents for like very talented or like very well-known musicians or artists. Like if you're a booking agent for like Jay-Z, let's say, right? And I don't know what Jay-Z's rate is, but let's say his rate is like 2 million for like a private show, right? Like let's say you're just some rich oil dude and you're like, I want Jay-Z to perform at my kid's fucking birthday party. And you pay Jay-Z 2 million. Who's to stop the booking agent from just going, yeah, his rate is 3 million. You pay the 3 million, the booking agent pockets $1 million, and then shows Jay-Z a fake invoice that shows the guy paid 2 million. Like, don't you think that happens all the time? I would think that that's so common in that industry because the artist is like so distant from the person that's like actually booking him, and he doesn't, and it's not gonna like come up in conversation because money's like a taboo thing.
Yeah, exactly. And basically that's why you see a lot of these rappers get into like issues with the IRS. They don't even know that they're getting into issues with the IRS. They find out later that, oh, this manager stole from them, this booking agent stole from them, and then they owe all this money in back taxes. Meanwhile, it's not really their fault. So they weren't watching their people, and they got robbed from, and they like inadvertently you know stole from the government, but they didn't know like the real price of the show.
Yeah, any sort of threat of government regulation or like just really even government oversight and stuff with taxation is kind of scary. But on that same line of thinking and that same line of thought, really more specifically, when you think about like getting back to what we were talking about though with some of the crypto companies, when you really think about the prospect of bankruptcy, right? Like you look at some of the biggest companies in that crypto space, you're looking at Kraken, you're looking at Binance, you're looking at Gemini, and then you're looking at a company like even Coinbase, right? Coinbase to me is probably the most interesting because they have the most upside, but they really need to focus more on like kind of monetizing off their users more, I would say. But Coinbase is so interesting to me. Just so interesting. They have all these promotions and stuff like that that anyone can enter. You don't even have to buy anything to be able to enter them. But
Yeah,
I
I actually
yeah,
I was just gonna say, I think actually like the best company positioned to like take control of the crypto market is like a private company. I think it's FTX. They just recently got into stock trading, so now they have stock trading and cryptocurrency. They're one of the few people that allow you to trade stocks along with own your own cryptocurrency in your own wallet. Robinhood's still in beta for only a certain number of users. The whole platform can't use their wallet. And I think you saw Sam Bankman-Fried buy like a 8% stake in Robinhood. I think there's a great chance that he actually acquires Robinhood and gets that big customer base under FTX's profile, and then FTX could be a real threat to Coinbase, which you got to look out for. Eventually, when they go public, FTX and Coinbase is going to be the number one and number two, and it's going to be interesting to see who comes out ahead on that cryptocurrency front.
yeah, I'm glad you bring that up because I'm a nerd at heart, right? When it comes to finance and it comes to investing, I'm a fucking total dork, right? I don't really have much of a life. No, I have a great life. I'm only joking around, everyone. But I'll read like the 10Qs and like the 10Ks that get filed with the SEC. So for people who don't know, you could go to Edgar, which is the SEC's comprehensive search engine. So basically, you go to sec.gov, you go to more options, more search options, more specifically, and then you type in the ticker symbol of the company or like the name of the company. So Coinbase would just be coin, or you just type Coinbase in, whatever, right? So if you go to the most recent quarterly filing and you actually type in and you hit Control F to search this up and you type in bankruptcy, it's very interesting. So they highlight potential risk, right? Because they have to do this in a 10Q. They have to highlight any sort of, it's essentially like, you have to highlight any sort of risk. It's like a prospectus for the most part. So they say this is as of their last quarterly filing, which was March 31st of 2022. So I'll just skim through this and I'll read, some of the more important and, differing things that I noticed here in this synopsis. So they say as of March 31st, 2022, we held 256 billion in custodial fiat currencies and cryptocurrencies on behalf of customers. Supported crypto assets are not insured or guaranteed by any government or government agency. Kind of goes without saying. That's all crypto. It's not backed by anyone, Okay, so here we go. Our success and the success of our offerings requires significant public confidence in our and our partners' ability to properly manage customer balances and handle large and growing transaction volumes and amounts of customer funds. Seems pretty valid. So here you go. This is the main point I found here. Any failure by us or our partners to maintain the necessary controls or to manage customer crypto assets and funds appropriately and in compliance with applicable regulatory requirements could result in reputational harm, litigation, regulatory enforcement actions, significant financial losses, and then it says lead customers to discontinue or reduce their use of or our partners' products. Skip ahead a little bit. Okay, they're talking about how financial condition would be significantly impacted, operating results, etc. Here's the most important 3 sentences you will hear regarding Coinbase. Moreover, because custodially held crypto assets may be considered to be property of the bankrupt estate. In the event of bankruptcy, the crypto assets we hold in our custody on behalf of our clients could be subject to bankruptcy proceedings, and such customers could be treated as our general unsecured creditors. Okay, that is scary, folks. What that means is any crypto that you have with Coinbase or really any sort of publicly traded or really privately held crypto exchange, you could be treated as a general unsecured creditor. So in terms of liquidation, this is really important to understand. In bankruptcy proceedings, and I'm talking about not restructuring bankruptcy, I'm talking about total, standard run-of-the-mill bankruptcy that everyone thinks of when they hear the term bankruptcy. Like you're going out of business, right? So in that sort of scenario where you are a general unsecured creditor, I will explain what that means. So there's really 3 main tiers that you'd fall into, and then there are some subsections of each tier. So the creditors and lenders get paid out first, but those are the secured creditors and lenders, okay? Now, that would be like bondholders, right? Debt holders, any sort of lender or creditor in that respect. Secured debt, that's what that is. The second tier is unsecured debt, right? Then below that, you have preferred stock. And then common stock always gets paid out last if there's any money left over in the event of bankruptcy. 99% of the time, there's nothing left for common stock, right? But why this is important is that let's say you have a portfolio of $100,000 in Bitcoin and you have it on Coinbase. What will happen is you will lose all of that money if Coinbase ever goes under. So it's the old adage that's been screamed from the fucking rooftops about crypto for the longest time. Not your keys, not your coins. Very simple. If you are holding an asset and you're not holding it in your custody and you're leaving it on an exchange, the exchange itself is impervious to any sort of hack. Your account, you specifically, I'm sorry, impervious is not the right word. You're vulnerable. The exchange itself is vulnerable to hacks, right? You're vulnerable to hacks through your account alone. So that's two attack vectors right there. And then the third vector is the exchange itself filing for bankruptcy versus you storing something in your own custody in cold storage, you having access to the physical keys to access that wallet to then be able to move that crypto. And the other aspect is you can't access that wallet unless you have the physical device to use to put in your keys to access that wallet. So, like, there's literally no reason why you shouldn't have anything in cold storage. There are so many good solutions to making a cold storage wallet where really, like, you could have a fucking paper wallet too. It doesn't matter. You could literally make, a wallet and just generate like a random fucking 12, 12 phrase or 24 phrase seed and just write it down on a piece of paper and then just scatter the pieces of paper around. Like if you read the book Bitcoin, it's Bitcoin Billionaires, I believe, by Ben Mesrick. He created, a lot of people know The Social Network, but he created the book that inspired the movie The Social Network. You know, that story is about the founding of Facebook. But in the book, he talks about how he interviewed the Winklevoss twins and what they did with their cold wallets was like they had paper wallets and they wrote down some of the phrases, but they scattered everything. It was like 24, 25 word, like a seed, right? And they spread it throughout like all over the world. So like one bank would have like two of the words, and then another bank would have like three. And they'd all be unaffiliated banks, and they would be stored in like safety deposit boxes, like all over the fucking world. So unless you had access to like 6 different or like 8 different banks where you could break into the bank and then hit the security deposit boxes, or like you somehow knew that they had accounts there, you would never know like where the seed phrases were. And I think that's a good rule of thumb. Like not maybe to that extreme if you're just a normal person with like maybe a couple $100 or like a couple $1,000 to throw around, but like keeping your money on the exchanges, like you have to be aware. You have to be aware that, like I said, there are 3 main attack vectors. You got to know them and you got to be aware. And it's your money. So you really have to watch it like nobody else, because no one's going to care for your money like you. You worked hard for it. Money is just the median of exchange. Money is just a way of quantifying labor. So like when you look at a pair of sneakers or whatever you're buying, let's say you make $10 an hour and you're looking at buying fucking $200 pairs of shoes, you got to go, how many fucking hours is that of work? I'm making $10 an hour. The pair of shoes are $200. Let's assume that's tax and everything all in. It somehow comes out to a round number. Just go with my example. You have to sit there and go, okay, that's 20 hours worth of fucking labor. I'm trading 20 hours of my life for a pair of shoes. That's how you got to look at money. That's what it comes down to. And that's a good way to prevent yourself from overspending. And it'll also help keep you in check with respect to how you manage your money and your investments as well. God, you have any advice for people looking to getting to the crypto space of like how to store their stuff and kind of what to be aware of? I know you spoke to me offline briefly about, you know, this whole thing with Coinbase, and you had some advice, and I thought some of it was really good. So I'd love to hear what you have to say for the people.
Yeah. About the Coinbase thing, you know, I'm not really too worried about this, to be completely honest. I think, you know, Coinbase's business model is very solid. I don't see them going bankrupt or anything like that, where this would be an issue. You know, they got Brian Armstrong. He's one of the greatest founders in Silicon Valley right now. He's keeping politics out of work. He's not allowing people to divide his company within. And, you know, I don't see Coinbase really going bankrupt, and I don't see this being the case. And that filing, you know, they're required by law to submit that filing, because basically cryptocurrency has never been litigated in a bankruptcy proceeding. So it is a risk. It's a potential risk factor that in a bankruptcy settlement that they would consider the cryptocurrency as Coinbase ownership and not your ownership. So they have to risk when you're filing with a you know, when you have these filings with the SEC, you have to like list potential risk factors, you know, counterparty risk, bankruptcy risk, any kind of competition risk. You have to you have to submit a whole bunch of risks that, as risk factors for your business. Like, AMD and NVIDIA, they just got in trouble recently because they didn't list about how Bitcoin mining affects their business, and how like a large sum of chips are being bought by Bitcoin miners. So they didn't put in their list of legal disclosures that Bitcoin mining is a big Bitcoin miners are a big purchaser of these chips. And if Bitcoin mining subdues, or there's less demand for Bitcoin mining, then there's going to be less demand for our chips. So when these companies have these lists or whatever, where they have to list these risk factors, this could be one of them in a proceeding. Coinbase can end up, if Coinbase ends up going bankrupt, you might lose your Bitcoin. And if you're like really worried about this, I'm not really too worried about it. I don't see Coinbase going bankrupt anytime soon. You could take your coins, take them off the platform to protect against this. You could diversify your coins across many different exchanges or platforms. But really, the best thing that you could do is just to take it off the exchanges in and of itself and store it yourself, and have a multi-sig wallet, so that you don't get kidnapped and have forced to give up your keys or anything like that. You should always have a multi-sig wallet with multiple signatories on it.
Totally agree, 100%. And I think a way to do that and to take it a step further is you see a lot of these crypto wallets, right? We saw a lot of these influencers, as Philion says. Love that guy, good YouTuber. But you see that there's a lot of influencers and like all these shitheads like making money on these crypto scams, and they're getting caught in 4K because they're running all the money to one wallet. Now, if you're a crypto influencer and you're a scammer, you're not allowed to hear this. But if you're like a normal person that just wants, you just want your Fourth Amendment honored, right? You don't want any unreasonable search and seizure. I'm with you. I'm not really in favor of that shit either. But I'll tell you this: God talks about multi-sig wallets. Well, there's another thing called SegWit, which is very important too. So you could do multi-sig, which is multiple signature verification, and then you could do SegWit, which is basically you generate, let's say Bitcoin, you generate a unique Bitcoin address that's tied directly to that transaction, which then ties to your main wallet. But your main wallet will not come up as the transaction ID when it's listed on the blockchain. So it actually generates a unique wallet address, which then forwards to your wallet, but it doesn't appear on the blockchain. It only appears as one transaction from, let's say, wallet A to wallet B, but your main wallet is C. So there's a transfer from B to C, but people don't see the transfer from B to C. They see it as just A to B on the blockchain, which is important to understand that. That's a very important distinction, because then you're able to, let's say you have a crypto wallet of, I don't know, $20,000 in Bitcoin, and you have a recent transaction that goes from A to B of 2,000. You're able to move that 2,000 into the $20,000 wallet without showing that you have 20,000 in Bitcoin in that wallet in conjunction. That's how you do it. SegWit. Look it up, people. Look it up. But speaking of all this crypto stuff and anything related to that, I will say this. Oh, did you have something you wanted to say? I feel like I cut you off a little there. What's up?
No, I was just going to say that's a good point that you made about the SegWit wallet.
Yeah, definitely look into that SegWit. It's a good technology. It was one of the big rollouts of like that Taproot upgrade for Bitcoin. If you know, motherfuckers. Anyway, yep, go ahead. What's up?
Coinbase, when you look at this thing with Coinbase too, it's not saying that necessarily in a bankruptcy proceeding that your coins are definitely going to be confiscated. It's saying it's just like a risk factor, which is, I think it's important for people to like understand and not blow this out of proportion. Because like if you look at, say, even like consignment agreements, right? If you don't have a proper consignment agreement, say you sell shoes at one of these shops like a Flight Club and Stadium Goods, etc., right? They have consignment agreements to protect you. But if you don't have a proper consignment agreement in effect, these the creditors that the bankrupt company owes money to, they're going to challenge the validity of who's really the owner of the goods, and you're going to get yourself into trouble if you don't have the proper consignment agreement in effect. So I think Coinbase should look into some kind of like a legal document that basically states that they're not the owner of these coins, and that the users are the owners of the coins, and basically have everyone sign it to basically like mitigate this risk somehow if they can.
Yeah, that'd give them a huge leg up on the competition. I totally agree with you. And that's something that's really important, because we saw these other exchanges, God forbid they get hacked, God forbid they go bankrupt, right? God forbid they collapse. Like if you're able to protect your customers' coins no matter what, you win that market. It's not even a debate. If you meet the regulation from the government and you appease Uncle Sam, and then you also win the trust and hold over the trust of your clients and customers, that's all you need in that space. Trust is everything in crypto, especially when it comes to safeguarding and storage, pertaining to your coins, which is really your wealth, particularly in that space. So now we're on this whole crypto wave. So I'll continue with this. There was a really interesting revelation that came to light, and some of this is a little bit older news, but there's been some new revelation here. So this is per Reuters. Nike ramps up sneaker NFT lawsuit with StockX counterfeiting claim. So this is a big one right here. I don't know if you guys heard about this. So this past February, Nike sued StockX, and they're alleging that StockX was selling unauthorized NFTs of its sneakers. Nike argues the digital assets were likely to cause customer confusion with Nike, who also began offering NFTs later that month, right? So StockX first responded to these claims in March of 2022. StockX says that they were using NFTs to authenticate physical shoes to not sell them as standalone products, and that Nike was trying to interfere with its sneaker sales. Well, Nike, craziest thing here is that they bought four pairs of sneakers from StockX, and they're alleging that the four pairs that they bought were counterfeited, and they all had verified authentic tags on them, one pair which matched a StockX NFT. So now Nike's asking the court to let it a counterfeiting claim against StockX, as well as a claim that the platform falsely advertised its authentication process. And this is big because we've seen this in the past with StockX, right? There was that huge debacle with the revenge storms. For those who don't know, they're just these vans with like lightning bolts on the side. And they were these, they had a few pairs of the revenge storms, but the main one, I think, was the main culprit. It was like the red ones with like the white thunderbolts, right? Or lightning strike on the side. And those, like, the fakes were so good, they were basically one-to-one replicas, like completely indistinguishable, because they're just fucking vans with a thunderbolt on the side. Like they're not that intricate of a design, or they're not that hard to copy, right, for counterfeiters. But Nike is saying that they used StockX's service. They bought four pairs of sneakers from them, and that all four were fake. Like, what the fuck? Where do you think this is going? Do you think Nike has grounds in this lawsuit? Like, how does this affect StockX? We know Dan Gilbert, the founder and, the current head honcho, for lack of a better term, at StockX. That's been his big pet project. They've created so many jobs in Detroit, right? They're the main player in Detroit. They've got a lot of employees. They've been building the company. They've been scaling. And now they're being hit with these different lawsuits. Do you think this affects their validity? Do you think consumers will look at these platforms differently, like StockX or Goat, or, I don't know, fucking, you mentioned Stadium Goods and Flight Club. Like, I know those are more brick and mortar consignments and not really any of these bid-ask reselling platforms. But how do you see like these reselling platforms? Like, where do you see them going with this Nike lawsuit? Like, does this negatively affect StockX, the consumer trust in StockX, and does it affect platforms like Goat or any other reselling platform?
No, I do believe that, a few fakes, slip through once in a while, but I believe the vast majority of shoes that come through like StockX and Goat are authentic and such. But I think Nike was just going to purchase as many shoes as possible until they received, the four fake counterfeit merchandise that they did, because I think the NFT market is a big it's a big marketplace for Nike. And if they're able to eliminate like StockX from the field, and they make their own Nike NFTs and such, then they don't even have to they don't even have to sell the or create the merchandise. Say there's supply chain constraints, they just create the NFT for the shoe in January, and then they release the shoe in December. They have everyone pay in January, and then they don't have to deliver the shoe until December, or maybe they don't even have to deliver the shoe at all. Maybe people just keep trading the NFT back and forth that Nike created, and they get a commission each time. Nike gets a commission each time, 10% from the sale, and they basically recapture much of the resale market of Nikes and Air Jordans. And the resale market of like Nikes and Air Jordans is probably much bigger than the
the first time sale of Nikes and Air Jordans in and of itself. So I believe that, like, Nike has a big incentive to basically come down on Stockx, come down on these platforms that are trying to get into the NFT space, because this is a big market share that Nike can grab from these platforms, and basically control the original sale and then any future sales of the shoe as well, which they don't control any future sales right now, any kind of resales, and that's a lot of money that they're getting up. Meanwhile, they're the creator of the shoe. I can see where they're coming from. They're the creator of the shoe. They created this brand, right? They should capture some of the upside on any kind of like resale action.
Yeah, I totally agree. Like I'm with you. I think a lot of it kind of is just sour grapes, right? Like Nike sees that, they're making Dior Air Jordans, right? And they're selling for like $5 or $6 over the fucking MSRP, or like Nike will come out with the Grateful Dead pairs that came out. Remember that? That was big. That was like 2 years ago or 3 years ago at this point. Like those go for thousands now. Like Nike, there's no way Nike looks at that and they're just totally fine. They're like, oh yeah, these $250 MSRP like sneakers go for $3,000. Like we don't give a fuck. Like there's no way. Nike definitely does not like that they're not recapturing that value. And then the main thing that you're seeing them do, obviously, and this is obviously large portion of this due to inflation, but you see them like raising the price on a lot of these like general release sneakers and limited sneakers, and it's really not even putting a damper on like the reselling market, right? Like those Dior Jordans that came out, like let's say the high top, Dior Jordan 1s, those retailed at like what, $1,000 or some shit, or like 1,500, and they go for like $6 or $7 anyway. So like, did it matter that they retailed at 1,000? Like, yeah, Nike is probably hyped. They were probably hyped when that happened, when they released them, because they got $1,000 or whatever fucking amount for them. But the reselling market is like 7 or 8 grand. So I feel like at some point, if Nike just keeps raising prices, like it's just gonna push a lot of times, like it'll just push the reselling market like even higher.
Right, that's a good point. They've been like raising their MSRP in hopes that they're going to capture much of the resale value, but all they're really doing is pushing the resale value higher, and they're kind of like upset that they're not capturing this value. But if you look at like this market is huge. You look at like say a Nike or an Air Jordan pretty much comes out every Saturday or every week, so that's 52 weeks in a year, right? They usually produce between like say I would say between 300 and 500,000 shoes for a general release. So let's just take 400,000 as an average. 400,000, right? Times I would say the retail price for an average Air Jordan is, I think it's like $190. So that's 76 million, right? And then the shoes usually like resale when they come out. Like this is an average shoe. This is not a Dior or a Grateful Dead or a Travis Scott or any kind of like collab Off-White or something like that. This is just a normal Air Jordan shoe, a 1, a 2, a 1, a 5, 11, or whatever. Usually they sell for at least $250, and you buy it from 190. So 250 minus 190 is $60 profit. You times that by 400,000 each week times 52. They're losing, right? $1,248,000,000 in potential net income that Nike's losing off of this resale market. Now that's if there's one sale of the potential shoe. These shoes, they flip hands 2, 3, 4, 5, 6, 7 times. So this could be like a $5 billion market each year, and then they take 10% of it, 500 million in net income, and then you give like a PE of say like 20 to it. This would add like $10 billion to Nike's market cap. So they're not going to just sit there and fucking and just wait and pick their nose and let these other people capture their market share and the brand that they made. They want to capture this market share, increase their share price for their shareholders, and increase the market capitalization of their company.
100% totally makes sense. And if you even look at what Nike does with a lot of like, not the general release, but like the super limited shit, like all of the like hype shit that everyone knows is going to go for a lot of money in the reselling market. Nike does that sneakers app, right? And then they do like exclusive releases through them only. So now they're starting to cut out the middlemen. They're starting to cut out like a Finish Line or like a Foot Locker or Foot Action, any of those clowns. Like they're starting to cut them out finally for like all the hype shit, and they're just releasing it on their own, right? Wasn't that like basically the reason they created the sneakers app and stuff like that?
Yeah, I think that makes perfect sense. They should have cut them out a long time ago. They any kind of like shoe that sells out and that's rare and such, like say, I don't know, any Air Jordan 1, 3, 4, 5, 6, 7, all these Air Jordans that before I would say 14, when that's after Michael Jordan stopped playing. Like any of these Air Jordans, they should just sell them on Nike.com or on sneakers. There's no reason why they should wholesale to say a Finish Line or a Foot Locker, and they're getting less money because they're wholesaling it to them, so they're not getting the full retail price. And there's no reason to do that because they're selling out. Why are you wholesaling something that you could just sell out on your own? The demand's obviously there.
Yeah, especially a pair like the this past year they had, or this past December really, they had the Air Jordan 11s and it was the cool grays, I think. And the funny thing is, like, they do an 11 release every year usually in December. That's kind of been like the trend for a while, right? But like the 11s, they always end up fucking selling out. And then you look at the premium based on what the retail value was when they came out, or like what the MSRP was, and it's always like a 50 to 60% premium. So like in the case of that, like why the fuck do you even sell them the Finish Line or Foot Locker or Foot Action? Like that's going to be, in terms of general release at least, that's going to be your biggest release for the year. Like why aren't you doing it exclusively through sneakers or through some exclusive platform where you're going to reap most of the profit, and you're not going to be able to deal, or excuse me, you're not going to have to deal with any sort of like bozo middleman. Like what, instead of, and you could raise prices too, because if you know it's going to sell out, right? Like if you know that the cool grays realistically will see anywhere from a 50 to 100% premium on MSRP, then why don't you just release it yourself, cut those bozos out, and charge like 250 a pair? Like I just don't understand it. Just do it with the biggest GR release, have general release, and then do all this limit shit too. I don't get it. Let them get the scraps. Who gives a shit,
Well, the other thing you have to look at too is they provide the counterpoint of why you would want to wholesale it to these companies like Foot Locker, Finish Line, and such like that.
Well,
They
because
built
then
out.
it's with the inventory if it doesn't fucking sell and you made your money.
Well, no, look at it like this, right? If you wholesale to these companies and they have like a store or brand infrastructure all across the country, it's kind of free advertising. People come into Finish Line, Foot Locker, and such. They see the shoe on the wall, so like you would have to pay less to get your brand out there and to advertise.
That's true. And if you're Nike, though, another main thing is that, yeah, you're profiting less, but then you don't have as much money tied up in inventory, right? Because the whole thing with inventory is like you're spending like labor to make these sneakers. You're spending, materials like, there's a lot of shipping costs with stuff like this, and it adds up. It gets expensive. But like in selling it to Finish Line, it's not really your problem if it doesn't fucking sell at Finish Line. Like if you dump a release, especially if you're a powerhouse like Nike, if you have a shit release and you're like, all right, Finish Line, like you could buy all of them, you're just like, woohoo, we got paid. Now to reinvest that money into R&D and to maybe signing some more athletes to represent our brand, maybe to make like a new shoe or a new design of like classic silhouette of a shoe. And then, that's really going to go towards making more money, that, any of the like net proceeds from the sale of like a, maybe like a lower end release that will end up in Finish Line or Foot Locker or whatever other fucking place. So I think that's a good reason why you want to keep them around. I'm not saying to like entirely get rid of Finish Line, Foot Locker, or any of those guys. But what I'm saying is that I think Nike should focus more on releasing their exclusive shoes directly through themselves rather than deal with any of these kind of third party bozos. And it also seems like if you remember, like this is years ago now I'm talking about. Do you remember like the Galaxy phone posits when those came out? I think that was like the biggest sort of the last kind of biggest like limited release that Nike did, where they did it through like a Finish Line or like a Foot Locker, and there were like major problems with that. Like I think in Orlando during All-Star Weekend, like people got like fucking killed for them and shit like that, and there's a lot of weird shit going on with that, right?
Yeah, you used to be able to like camp out for shoes and like sit outside a store and wait, and then after like the Galaxies and the Concord 11s and around, I don't think it was like 2011, 2012. People were getting trampled, people were getting stomped on, and Nike kind of went away from that. That's kind of the reason why they came out with the Sneakers Act, the Sneakers app in general, is because people were dying and being trampled on for these limited shoes. And there's no reason for people to camp out and
First of all, these people, they need to get a job. It's fucking embarrassing. They're sitting outside for 2-3 days, 72 hours or whatever it is. And I don't know, they might make $700. Okay, you made $700, but guess what? You smell like fucking dog shit. You've been out there for 72 hours. And you basically made $9.72 a fucking hour by sitting there. You should just get a minimum wage job for $15 an hour.
Yeah, you could go work at McDonald's and you'll make more. McDonald's raised the wages for starting employees. At some locations, they're $18 an hour right now. That's well over minimum wage of fucking $15 an hour. If you're good with that. And federal minimum wage didn't go up yet. I think it's still like $8 or some shit. But states like New York, California.
I'd rather make $8 than smell and sit in a chair.
Yeah, no, you're right. Yeah. Shit your pants, piss your pants, sitting in the chair.
Get trampled on. I can't even go to the bathroom. I got to take a fucking Poland Spring bottle of peeing. Why would I want to do that?
Yeah. And on that note, folks, thanks again for listening to another episode of the Anonymous Investors Podcast. I am Stonkman, as always, joined by my co-host, God himself. Don't get trampled. Stay safe, stay frosty, and stay cool, folks. Thanks again.